Hello and welcome back to Crypto Clarified. My name is Dovile and I'm director responsible for digital asset research at WisdomTree.
And my name is Vinh Tran, Associate Director of Business Development at WisdomTree Digital Assets.
Today we're joined by Chris and Luke from Plume Network. I'll let them introduce themselves. And today we'll discuss everything about real-world asset tokenization with specific topic areas of key users, key use cases, and most importantly, how can we grow the crypto pie big and delicious together? Hi, welcome Luke, welcome Chris. Would you mind introducing yourselves briefly to our listeners?
Of course, please, Luke, go ahead.
Yeah, sure. So I'm Luke. I'm head of partnerships over here at Plume. It's been an exciting journey. I used to be at Arbitrum doing fintech. Also had a podcast there, so I love doing this stuff now. Saw the kind of tilt of RWAs and how expansive it could be, and joined the Plume team here.
And I'm Chris. I'm the co-founder and CEO of Plume. Happy to get into it. Thanks for having us today.
Well, thank you for being here. And you made references to Plume. What does Plume do? For people who are not close to crypto space, if you could explain that, in as simple language as possible, please.
Totally, yes. Plume, we build a network and ecosystem and a blockchain, ultimately focused on making it easy for people to interact with the real world on chain. So we focus on kind of tokenization and RWAs, which is real world assets, right? We work with a bunch of folks, like WisdomTree and a bunch of great funds to bring their products and their funds on chain and make it easy to be usable and accessed by the on-chain audience and by the different people here. Whether that's retail people in different worlds, it's different funds, it's other institutional folks, whatever, it's really just bringing them into an on-chain environment, and so they can be used and purchased and interacted with that way.
Excellent. And how do real individuals, retail individuals, interact with tokenized assets nowadays?
Totally. Yeah. So look, there are a few ways of doing this. Look, at Plume, we've built, our sort of like full focus has been on aggregating this user base and its distribution, right? In order to build up a community in which funds like WisdomTree and folks can actually then expose their products to, right? So today we have, the largest ecosystem of any RWAs in all of crypto. And so we've over, when you look at the RWA holder base, we have, a little bit under 300,000 holders of RWAs now, which is over half of the market. So it's bigger than Ethereum, Solana, AVAX, everything in the next 10 combined. And so we're over 50% of the market when it comes to this. We have the largest ecosystem of projects and different protocols building on Plume as well. And finally, that results into a few $100 million in TVL on Plume. And so, total value locked. So different activity and different dollars just floating around on chain, right? And the way you do this and sort of like what this is today and why it's worked for us is historically interacting with RWAs and putting things on chain is really taking a carbon copy of what you are doing in the real world and putting it on chain. Right. Which really means you are still having to do a bunch of KYC. There are a bunch of transfer restrictions. There's a bunch of, a bunch of rules around when you can on-ramp, when you cannot, different size requirements, maybe minimum ticket sizes, all of that. Right. And so it ends up being a very similar process, right, to doing anything on chain that you'd have to do off chain. Right. And then you just end up getting a receipt token, right, a token on chain that represents this activity. It just happens to be on chain at that point. Right. Now, that's not a bad thing. And we enable a lot of this as well. We have a lot of our users doing the exact same thing. So it's not inherently wrong. But the way that we've always thought about this is that ultimately when you're thinking about taking something on chain, there's a technology component, right? Which is taking this asset and putting it into a new environment using a new infrastructure, right? But the second component also is the user and the user base, right? And the way we've always seen the on-chain world is it's not just a technology, it's not just the blockchain. The blockchain is actually just a network. It's a network of people, right? And users doing different things, right? And these users are all over the world, right? Number one, right? And there's a certain style and a certain way that people do things on chain today. Generally speaking, it's very fast, right? It's fully liquid, it's 24/7, it's global, right? And people are used to kind of sitting there clicking buttons, right? And doing things very quickly. And it's not really about filling forms. And generally speaking, it's a way to very quickly aggregate retail dollars, right? You have tons and tons of money. If you look at some of the biggest protocols out there, Aave is $50 billion in TVL. Athena this cycle has gone from, very small to over 15 billion in TVL as well before coming back down a little bit. So you can see when things go well and are fit in this model, right? The retail money aggregates very, very quickly because you distribute trust, you take away all the middlemen, you automate a bunch of process, and so it allows everyone to interact. So when you think about that user base, right, the question is, how do you design a product that fits what they know how to do and fits their use case today, right? And the on-chain world is really not filling out forms and sending emails and all this kind of stuff, right? What they want to do is click buttons. And so what we do is we make it easy to take these products, we sort of transform them into a more crypto native product and a more crypto native feel, right? So this way that audience knows how to sell, knows how to interact with it, right? So if you're going to sell a product, let's just say in America, right, there's a certain way you market and pack and distribute the product versus, let's say, you're selling it in China, because you have to also package and market and sell the product, and maybe the product ultimately takes different forms, right? So fundamentally, it's the same product, right? You're still selling cheeseburgers, right? But how you deliver it, and maybe in Asia, right? You got to put kimchi on it, or you got to do whatever. You got to change it a little bit so it fits the audience, right? And that's how we see it as well, which is the on-chain environment today. It's fundamentally the same thing. They want access to great products like all the Wisdom Tree products, but you have to just reach them and deliver to them in a way they know how to do it. Otherwise, you'll just have very little people using it, right? And so again, I think that's how we think about building the community, building our ecosystem, and getting adoption for our products today. Does that make sense?
It does make sense, and I love your analogy about cheeseburgers. Really well illustrated. Thank you.
And I wanted to double click on that. So you mentioned a ton of different asset classes, right? You mentioned cheeseburger, you mentioned kimchi, but I think obviously we work together on the more traditional finance side. So we're in the space, right? We talk a lot about RWAs. I think the coin term is RWA-fi. So tokenizing on Plume. What does that mean, and how have you guys really differentiated yourself in a way that makes sense for users? So you mentioned institutional users, but you also mentioned the idea of aggregating retail users, right? So how does Plume differentiate itself?
For sure. It's a good question. It's a very real question. I think it's not easy to tell either. We're cleaning up, we're actually launching a new site and doing some new marketing stuff. So it'll be a great place for me to kind of, try this stuff out. But the way we think about it is, again, we think about this. I think most RWA projects today and most folks in RWAs are very focused on the supply side. Let's bring the asset on chain. Let's focus on the technology and what it can do, right? Which I think are all valid points and the right things to think about. I think for us, we've come at this just from the other angle, right? Which is, how do you bring the user to do something, right? And how do you actually build things that make them want to use it? And that's why we came with RWA, because if you look at crypto today, a huge use case and a dominant use case is DeFi. Right. And DeFi is decentralized finance. It means a lot of different things, but really what it means is being able to do different sort of financial related things in an on-chain way, in a permissionless way in an environment, right? Which means a protocol, right, can let you do different things without having to interact with a human or a customer or a bank or whatever it might be. And one of those things is lending. That ends up being a big part of it. Lending and leverage, what we call looping in crypto, right? Which is, you can take an asset, you can borrow against it, you can then re-put it back with the asset, right? You can move in and out of it at any time in a secondary market. You can maybe use as collateral and put it into an exchange as trading collateral, and then take out positions on other things, right? Or maybe the classic example is Bitcoin holders were very excited about Bitcoin. They didn't want to hold it, but they wanted exposure to other things as well. So take out a loan against Bitcoin, right? And then use the loan to then go buy other assets and get exposure to other things. So you can still hold your BTC while being exposed to other things, right? And if you're bullish on all these assets, then the difference in the interest that you pay will more be covered by the growth of those assets, right? And so that's kind of what DeFi is today. It's just sort of enabling sort of classic financial services to people, right, in an automated way with machines, right, and with protocols. And so for what we're trying to do is say, look, like, when you tokenize an asset, it's not like it goes through magical transformation where daily it's like a different thing. It's still a tokenized asset, right? And so especially for us, as we think about bringing on the real world, right, and growing the pie for what's happening in crypto and on the on-chain audience, right? You have to also think about, like, how do you get real people in and how do you bring on new things, right? And for us, it's always been, how do you make the product better, right, than what it is today, get worse? Actually, most products today, right, when you put them on chain, actually it's significantly worse, right? Because one, it's a lot of fees. Now it's just very simple. You have more middlemen to take fees out of the whole thing, right? So maybe normally, you put a T-bill on chain, you get 4.5 or whatever like that. A couple of P's, then you're looking at 4.2, maybe 4.1, 4.0, right, as your yield. So it's gone down. It's gotten worse, right? Not only that, you have to trust new custodians in the middle. You have to, you have to trust the issuer, right? And there's smart contract risk. All these things, right? So you have to make it better than what it was off chain to make it interesting. And the view that, and the thing that does make things better, right, is being able to plug into this ecosystem where now you can take out loans against it, use as collateral, right? You can intermingle it with a bunch of other crypto native assets. You can loop against this thing and increase your yields or whatever it might be, but you have to change the asset to make it fit to actually improve the usability, right? So whereas in the real world, if you buy this asset and it's safe, solid, sound, brand new trust like Wisdom Tree and others, right? Like it's great, right? And people will buy it. But if you take it off chain, right? Now, if you can do more things with it, then perhaps it becomes an avenue to begin to explore what more we can do on chain as well. So that's how we've thought about this RWA-fi, which is taking these classic DeFi functions and crypto native functions and applying them to real asset. And so instead of taking a loan against your Bitcoin, right, to then go buy different alts, right, or buy Ethereum or buy Plume or buy Solana or whatever it might be, right? Now you can instead, what we've seen people really like holding P-bills. People like holding traditional classic products that have great yields because that's what they are. They're great products, right? And there's a feeling of safety. There's where it's coming from, but being able to then utilize that across DeFi and do other things with it is a big use case. So bringing T-bills on chain, bringing CLOs, bringing other assets on chain, or whatever it might be that really have produce a lot of APY, a lot of income, right? And then allowing that user to then use it across crypto, right? Take out a loan against it, do other things with it, or even simply just trade with it and move in and out very easily, which is like, I can hold this asset today. All of a sudden, there's something happening over here. I want to go to it. I'll swap out really quickly and go into this. And then when I come back, I kind of want to come back to this because I still prefer holding my money on a T-bill. So that's this RWA story. It's really making these assets movable, usable, composable, right? And giving them a bit of velocity. So you can, just sort of expand the nature and expand the use case if you can do with these assets.
Yeah, I think we definitely align. And I would say breaking that up to two parts, right? Like one, why are we bringing it on chain, right? We're not just tokenizing for the sake of tokenizing. The point is, I think you're alluding to it, the idea of programmable money, the ability to take assets, real world assets, bring it on chain, and then add all these other crypto native use cases to it, like lending, like collateral use cases, and all of that. And I would say, Luke, bringing you in the conversation, right, being the head of partnerships at Plume, obviously, Chris has alluded to a lot of it, right, in terms of there's a lot of different parties that have to go into this, where it's the asset issuer, where there's protocols building on the more utility side. How do you guys think about that ecosystem, and what are you guys prioritizing?
Yeah, I think the biggest thing is like RWAs can be like the building blocks of so much more, right? And we're trying to enhance this. We want to have protocols. I think even at my time at Arbitrum, it was interesting because the first wave of RWAs, they came in, but not a lot of people would do it much with them. They kind of just sat on chain and maybe you had a couple foundations buy, some big treasuries buy, but for the most part, it wasn't really interacting with DeFi. And that's, I think, the biggest thing. It's harder to do this at a general purpose chain than I think a focused chain like Plume is, right? We were able, like when we worked with Morpho, for instance, we were very keen on getting them to accept RWAs as collateral, and that was like part of the partnership that we spec'd out. We wanted to make sure that there was usage, there was ability to do things that were, crypto native, but still like something that was accessible to people and transparent, right? Like these things are very much fund docs, you have prospectuses, you know exactly where it's going. So none of this is like black box type of stuff, right? Your money is moving into these investments through Nest protocol, for instance, and you're able to tap into like maybe a lending borrowing through Morpho to achieve a little bit extra return. I think this is like kind of the goal that we've been trying to pursue from here on, going to do this. And like, this type of thing resonates because not only is it transparent, but you have like the backing of strong financial institutions like yourselves at Wisdom Tree supporting this product. And then you have like strong brands within crypto building on top of it. And I think that's the biggest unlock in terms of like the RWA space, right? Because when you're pursuing this in particular, we are able to push this agenda forward for projects within our ecosystem. DEXs are built around supporting Nest, for instance, as well. And you just have way more ability to play around with things. And that's like the I think what we proved that's possible on Plume chain that certainly isn't like as pushed as a narrative on other chains to date.
And actually, talking about a broader ecosystem, you mentioned, Chris, 300,000 users or so, and you having more than all others. How do you ensure this type of success, and how do you ensure that you remain number one? Because I know that competition is intense in this space. So, how can how did you get to this position, and what are you going to do to stay ahead of all others for the foreseeable future?
Totally. Well, look, I would say this. As the founder of Plume and like CEO, like I certainly care a lot about these numbers. Don't get me wrong, and I'd be lying to you if I didn't say I look at them all the time. I talk about Luke all the time. Like I think, like, I would be lying to say if we don't focus on this. But it does maybe take a step back. We started Plume for a very simple reason, right? We wanted to grow crypto, right? That was the point. Um, and that's why when you see what we do, a lot of people sometimes don't fully understand why we take certain actions, what we do, right? We're very open relative to others. I think a lot of ecosystems are very focused on themselves and build their own thing, whereas we're openly working with everybody. Even sometimes, when the value doesn't seem to accrue to Plume or doesn't seem to be as clear, right? Because for us, it goes back to that same goal. We want to grow all of crypto, right? And the reason we built Plume was out of necessity, right? Not because we wanted to build a chain. In fact, if I go back in time, I'd probably not do it. It's been a lot, and I wish I would try maybe go a different way. But it was sort of one thing after another, right? We realized that we had to build these things to bring assets and bring real world assets on chain. But the whole point is not to hold them prisoner and keep them captive here. That would be antithetical to the sort of value and the entire ethos of crypto, right? We want these assets to move around. We just think today, I mean, Luke knows this, and we know this better than anyone. Like actually making them move in crypto, you can't just plug you can't plug RWAs into this existing ecosystem and infrastructure. It just works. It's not how it works at all. Every single thing that we have, DEXs, lending markets, oracles, very literally every piece of infrastructure we've built for crypto native assets today needs to be slightly tweaked for the RWA, right? Because it's not quite the same thing. So you ultimately do have to rebuild the entire ecosystem one by one, and then they all have to work together to make this thing work, right? And so by doing that, that's why we have Fluent. It's a starting point to then bring all these things out. And so going back to your question, how do we stay on top? Like I think it wants me to almost realize that we probably won't always be number one in this number, and while I certainly go on a lot of podcasts and I talk about it all the time, and it's like a whole thing to say, like it is not the focus, and it is not the primary drive and the prime objective. For us, the prime objective is crypto growing? Are we playing a meaningful part in that? And right now it's the starting point, which is, let's bring these numbers in. Let's get some people, let's just show it, right? And show this some adoption, some traction, but that number will shift over time to utility, to usage, to which types of products people are coming in and maybe which geographies and all these things. And so I think that's the philosophy behind it. Now, how do we stay on top? In general, because I'd also be lying if I wasn't fiercely competitive about it. So, but like, I would say, look, how do we stay on top? I think it's just being very, I think it's just trying to stay ahead of this stuff, right? At the end of the day, we've always been probably different other ecosystems in that we've been focused on one thing, RWAs. Doesn't mean we don't have non-RWA stuff, right? Permissionless chain, people want to launch meme coins or NFTs or whatever. Like, I'm not going to stop them. We can't. It's an open ecosystem, right? But our focus has been on RWAs, and so because of that focus, it allows us to build these things. And it goes back to this idea. A lot of people are trying to just let's just throw RWAs into the mix and it'll work. And Luke and I know it doesn't. It provably doesn't. And so you just have to keep doing these things and keep building all these pieces around it. Luke alluded to Nest, which is one of our protocols that sort of takes RWAs and makes them accessible to the crypto user, right? That's just the front door, right? Once you come in, you still have so much more to do to actually make this thing work. And so I think just by staying focused and building a tightly integrated ecosystem where you continue to make each asset more useful, more movable, and you build new functions and new features for each of these products, then that will allow us to stay on top and stay moving in the right direction. And then in bigger picture, moves the whole space into the right way, where we're really taking the TradFi world, right, to a lot of these great products and taking crypto, right, and this broad user base, this community, and really blend into one. I just, we've always said, I don't see it as a traditional finance and real, like RWs. To me, it's all the same thing. People are already doing these things today. People already come into crypto, trying to get exposure to BTC or ETH or alt or whatever it is that makes them money, and they come back to the real world after, right? And they want to put things into fixed income assets. They want exposure to all these things, and they realize, oh, you know what? Turns out like that's great, but I still want a little bit of exposure, and they come back to crypto, and that's what it is. There's this already this flow back and forth between this thing, and that group of people is only growing every single day, right? And we see stable coins as a great bridge for that. But like as you look at that, that's already growing. So all we're doing is trying to facilitate what's already happening, right? And do this in a more efficient way. And so that's how we think about it. And so that number will grow. It will grow for other chains, I hope, because if it's just us, that's no good either. We want this to grow for everybody.
Yeah, and I like what you're saying in terms of like the different asset classes and how people operate on chain. You made me think of two questions to that. And one is, so what types of asset classes are you seeing take off from a use case perspective, a killer app perspective? But also, I think in addition to that, when you talk about scale and really growing that number, what barriers do you see coming in the way of that? Maybe it's RWAs, maybe it's the other types of assets that you see being tokenized. Can you walk us through that?
For sure. And for the, Luke, Luke doing partnerships, he does all the ecosystem work. So Luke probably knows this better than I do. So I'm curious what Luke has to say too. I would say my view on this has always been that I think everyone always asks this. I think it's a real question. We always ask this a lot. Where, like, what's happening, what's popping off, and like what's going on. And that's why we built this ecosystem, because we want this sort of index exposure to it all, right? And to have a sort of playground where different people can try new things. We can see them change and see them come out, right? Now, what do we actually see, right? I think of it as, it's going to be annoying to hear me say this again. I always think about the sort of the end user and the consumer, right? What are they? What are they doing? What do they want? And if you look today, the audience today is 99% like on-chain people, right? It's crypto natives doing crypto native trading, right? Now that is changing with stable coins, with different with the regulation opening. All these things are changing very, very quickly. And so the things that those people want to do are going to change as well as that audience changes. But today, right, it's 99% crypto native people. And what do crypto native people do? Right? They're really just three things that they do, right? One is they're doing what they called yield farming, right? Which is just trying to just, get your maximum yield out of this while not doing too much. They're called DeFi farmers or whatever, right? Number two is speculation and just trading, right? Usually with a lot of leverage, right? And number three is just kind of spot, I want access to this, I want access to this, and I just like kind of move around, right? And do different things in here. So those are kind of three things, right? It's yield farming, right? It's trading and it's speculation. And so we find products that sort of fit those use cases and try to encourage those things to flourish, right? And incentivize or whatever those different avenues. And so today, the biggest one by far is for sure going to be the yield farming area, right? It's this idea of farming, right? It's the idea of earning APY, right? And having a stable source of income and yield on chain. And that's why you see today, like probably one of the biggest categories is not probably probably the biggest category is T-bills, right? Some of the charts will sell you private credit. It's not true. It's a miscategorization, but mostly we get that later if you want. But like, it's not true. T-bills are broadly the biggest category today, right? It's because T-bills represent that use case, safe, stable, straightforward yield. You can get, especially in the last couple of years when the interest rates have been high, you get 4 or 5%. Turns out that's a great yield, right? And using it as the basis for logging into crypto, right, has been a huge growth driver for the asset class, for that asset class on chain, right? And now you're seeing as people get interested in that yield and sort of get exposure and understand what that is, they now kind of want to move up the yield curve, right? And they're sort of like, okay, now like CLOs are become, I would say these things are still so early, they're not a thing yet. But you can see, where we talk to users and talk to like the larger institutional folks all the time, right? In crypto, and you can see them opening their mind to it. 2 years ago we started, nobody wanted to do this. I couldn't get anyone to care, right? And now they're like, okay, great, T-bills we get. And now let's talk a little about, CLOs, talk a little about, private credit. Let's talk a little bit about these types of things and moving down that direction. So they're beginning to understand and figure out how to use this in their portfolio when historically all they had access to was just BTC and ETH, right? And so that's kind of where things are going right now. And it's because yield farmer is what this is today. But I'll say this, I think actually the number one asset and the number one RWA ever is a stablecoin. And it's not even close, right? The stablecoin is what I think it's nearing $300 billion in market cap, right? Whereas, RWAs in totality, sans stablecoins, it's like sub 30, right? Still great, right? Don't get me wrong. We've grown, 3 or 4x in the last couple of years, so it's good. But the stablecoin is still no, and the stablecoin, if you look at that again, what is that doing? Again, that's going for stability, it's going for safety, right? It's very much the counter to the wild swings of BTC and alts, right? Someone wants, stable stability things. And so that's kind of where we're seeing this. Like you start with stablecoins, and now what do you want to do after that? okay, you're holding value. Let's earn value while we're being very stable. That means T-bills, right? And we could see it kind of moving up from there. So that's kind of where things are going, right? Is you really sort of building off the backs of the success of the stablecoin in the RWA world. But Luke, I mean, what do you think? And what are you saying?
Yeah, no, to your point, I think there's so much to be done in terms of like, you've seen them back in the financial innovation days where like you would have entire new markets created, right? And I think the whole idea of crypto is to do that, right? You had like junk bonds, for instance, that came out of nowhere. It was just like a thing people were interested. None of those companies could issue debt before, but Milken and his gang had just started doing it and developing it, and you find an entire appetite for that. I think that's like part of the thing that excites me the most about issuing assets like crypto, because like, look, private credit, there's not a lot of like liquidity for that at the end of the day. Even in traditional markets, we're seeing that take a foothold. That could be it. It could be something else. We're seeing stable coins do especially well. Like, we see so many launch, a lot of people in the store of value, and especially in this market today, like you're seeing a ton of volatility. Like, not only is you having big swings because of anything that's going on in the macro environment, now trickles down 2x, 3x into crypto. And I think people want that. And you can see, people moving into that. And when that happens, like RWAs, I think outperform more of the crypto market, right? Because you want that extra stability. You're holding stables, might as well just put it into some, potentially private credit assets, potentially other fixed income assets. That's one way to do it. Or just, in lower beta yielding, cryptos is not a bad play either. But the whole point is, I think there is a lot of white space to develop on this. There's currently enough money in crypto to support this. You have a ton of people just sitting on cash potentially that could flow into this type of stuff. So what I'm thinking is that you're going to see a big wave of innovation, and that's going to come back to new products being developed. I could say like even Pendle has been a great example of financial innovation, stripping away yield from certain types of things and putting, principal and yield split. We just actually announced a partnership with them. We're working on them. They've been doing working on a best faults to strip out yield, and that's exciting. So I just think there's so much more to it. And the innovation is going to come and probably be the next wave for our LBAs.
And maybe to add to Luke, like some of the fun stuff, like, again, we talk a lot about financial products, which I think end up being a big part of this. But, for us at ecosystem, we see everything. I think, like on the BD side, Luke has talked to every single type of asset issuer out there, right? And a bunch of them come onto Plume, and some of them are doing like real things. It's always like on one end you have, again, we have so many great financial products, right? Like funds from Wisdom Tree, and we have Apollo and a bunch of other things, which has been great, right? On the entire other end of the spectrum, we have all the esoterics and like the random stuff out there, right? So for example, we work with a durian farm protocol, right? Where they take durians, they bring them on chain. Turns out durians are really profitable. And so like bringing them on chains, you can, stake your stable coins and invest in durians. There's one where we have a tuk-tuks. So tuk-tuks are these like, they're like cabs in Thailand basically, right? That you can invest into through these tuk-tuks and finance their loans and earn some income against it. Work with sort of camel farmers as well, right? So again, camel to yield, there's milk, there's racing, all kinds of stuff. So there's also the camel stuff. And so this way, through Plume and through a lot of things, like we just see all these different assets coming on. And so, are they going to take off? Probably not. Not today, at least, right? But what we try to do is build this sort of like ecosystem environment where everyone can bring these things in and they can all kind of mix and match together, and you can begin to see how that's happening, right? If you look today off chain, if you look at what the kids are doing, at least, and what people are doing, like an asset could be anything, right? It can be sneakers, it can be Pokemon cards, it can be whatever it is. It's no longer the traditional sense of what we thought an asset is. And so you're seeing that kind of take shape on chain as well. And so that's for a future like we're really excited about. It's like everything is an asset. You can hold your value in whatever. And then because it's all programmable, you can use that as cash anywhere. You can swap in and out, and it becomes and you can sort of build your own exposure, whatever you want, and still make it all useful and liquid. So that's exciting.
All of the economics of durian, none of the smell.
Exactly. Good. I'll have to tell them that. We'll have to update the marketing, but that's awesome.
I really liked, Chris, when you talked about growing the pie, because I agree that all of us want this pie to grow as big as possible, because when each one of us then gets a slice, that slice is nice and juicy. But look, to grow the pie, one thing is growing the size, the other is making it delicious. And from partnership perspective, like what type of ingredients are still missing? Like, what do you wish you could add to the pie over the coming years?
For
Yeah,
sure.
no, that's go for it.
Yeah, Luke. Yeah, no, please go.
No, I was just gonna say, like, I completely agree that there is so much variety in that you can add, right? And that could be anything from Durian's, esoteric assets that Chris talks about earlier, but also just like SPV vehicles in terms of like interesting venture investments. Like one of the biggest things is like untapped mm, like a lot of stuff is happening in the private markets in terms of the venture side, in terms of robotics, AI, these types of investments. And you could gain access to them on crypto, right? And that's like an interesting way to play this. But I think, yeah, there's so much out there that you could move on. And I think this year's been a tremendous example of that. But Chris, feel free to add. Yeah.
Yeah, I think you're totally right. In that we're all here for a very simple reason, right? They want the pie to be real. We want it all to look. Let's also be real. We want to benefit everybody, including ourselves, right? How to make it good. I think a few things. Growing the pie is about opening the door, right? And allowing new money, new capital, new users to come in, right? That's a largely both a regulatory comment, right? Because you just need new rules and people to feel comfortable. It's a time in the ground type of thing, right? We've seen even simple things, because over time people get more comfortable with Bitcoins just because it's been around the longest, right? And so second is just like the passing of time will help. And third is attractive things to do on chain, right? That bring people in. We saw today there are really three reasons you come on chain. One is you're interested in Bitcoin, so you buy Bitcoin. That's how you get on chain. Number two is you're interested in meme coins and NFTs, and so you like gambling and speculating, and that's why you come on. Or third is you want access to the dollar, right? And you want to use it as a stable coin, right? So that's the day. That's how it works. Now, how it works and makes it work for all of us, I think really it is. Again, I think as long as more activity comes in here for all of us, and we're all properly exposed to things, right? Because look, if we're all on chain just holding stables, right, the pie could grow massively, and nothing's changed for me. I'm still holding stables, and so, the way to make sure it's good, I think, is a couple things. We just need to make sure that, one, as little blowups happen as possible, right? That's kind of the natural cycle of things, right? They're always kind of a rise and a fall, and every time the net is higher, and it's sort of inevitable, right? This happens with any new technology cycle, and it happens with especially a new technology that's completely open, right? Like that's just how it goes. And so we'll see it happen, but we'll see that shrink over time, right? I think the first thing that makes something taste good is making sure it doesn't taste bad, right? And so, having things flow out and blow up in horrible ways, and a lot of the losing money is like one thing we have to avoid. We can see it already changing with new regulation, with new actors in the space as well, like us, that I think want to traverse both sides and take it more seriously, right? Than just quick pump and dumps or whatever, or things that go the wrong way, or even just accidents. I'd say some of the stuff in the last cycle, not necessarily malicious, but things just kind of went the wrong way, and we got overexposed and a little bit too far on the skis, and things go the wrong way. So I think that's the first step. It's just making sure that we're trying to be sensible about what we're doing, right? And I think right now today the beautiful thing is like some people in crypto, it very much feels that way, right? People are really trying to take it seriously, especially with the doors opening on the sort of institutional regulatory side. You have a lot of people coming together to try and respect the rules, to work with people to figure out how to build things in a sustainable way. Right. So that's number one. Number two then is then just making sure the on-chain stuff today, thinks about the users and thinks about how it is. Right. The beautiful thing about doing things in crypto is that the reason we can all make yield is because it's not some gated product, right, that only institutions can use, right, or only certain high net worth people or whatever can use. That yield and the efficiencies that come out from this all flow out to everybody else, right? And so as long as we continue to build protocols, right, that take that into account, right, and utilize the crowd and the retail activity in a useful way, and then pass the rewards back and pass that back, everyone should be able to profit and make ransom off. Also, there's both just the activity, but also then tokens, of course, will go up and everyone will be happy, right? And so I think it's all those things together. We have to be responsible actors. We have to try and make sure there's no craziness. Of course, there's going to be craziness, right? And there's going to be up and downs, but trying to, as long as that goes down over time, that's good. And number two is just making sure that, we don't just replicate the on-chain world. Let's do the off-chain world on-chain, right? If we literally do the exact same thing we did before and put it into a new system, it's going to be the same thing. Versus for us, I think we think about this as how do you do it in a crypto-native way? You can always see it. How do we do this for a crypto-native audience? How do we pass the rewards on? How do we make sure that everybody eats, right, when we bring these things on chain? So that's how we make this thing taste better, I guess.
Excellent. And since you mentioned few difficulties, just taking a look at your competition, like who are your biggest competitors, both on-chain and off-chain? Because I'm sure that there are challengers coming and wanting to get your piece of pie.
Yeah, totally. I mean, it was funny because like when we started Plume, I remember everyone told me it was stupid, you know, and and everyone said like RWAs are not a thing, right? No one's going to use them. It's kind of a joke and like blah blah blah, right? And now today you see everyone in the world trying to do something. You know, you've got the president talking about it, right? We have major Web2 companies doing everyone's doing a chain, everyone's doing a stable coin, and so it's clearly become a thing, which is great to see, right? And now what that means though is that we went from no competitors to now many. Now, truthfully, I don't view them as competitors, you know, just because, again, like I think for us, the chain, most ecosystems are like, you know, if you don't work with our system, you know, go to hell, right? Like, and we want you to work with us, and that's it. And like, we're here to build ours. For us, again, we're not like that. We're here to grow crypto, so we work with everybody. People that normally see as competitors, you know, we work with, we're partner with, and friendly with all the time. You know, so we don't really have that dynamic now. I think it's also silly if people ask you who you compare to, you say nobody. It's also ridiculous. You know, it's also kind of like not a thing. So I would say, broadly speaking, there's sort of three categories. Number one is direct tokenization and RWA kind of like ecosystems. You know, that's obviously one. You know, the truth is, there's not really any competition there yet in a meaningful way. You know, this definitely you know, we're one of the earliest, we're one of the biggest. And you know, there's new people coming up, but you know, again, you have to build up some momentum to be in the case. So I'm not that worried. Number two, I do think is a more real thing is like general purpose chains, you know, like the bigger ones, right? And so if you look at anywhere with you, again, we think about users, that's what we care about. If you look at Base, you look at Solana, you look at BNB Chain, you look at some of these other ones that have a big community that are also shifting to thinking more about RWAs, you know, in theory, they could be competitors to us as well, right? Again, like, you know, all three of those we work with, you know, and, you know, we are doing stuff with as well. And we have more announcements coming around that. But in theory, they could be competitors because we could be competing for on-chain there, right? In the on-chain world, because, you know, if a protocol goes here, do they go there? You know, doesn't really matter. For us, again, we want to be open. So if they go anywhere, you know, we still listen to exposure. So it's good for us. But still, like that is a point of competition, I guess. And then the third is probably the off-chain folks today that are coming in, right? And so, you know, you look at things like, you know, Robinhood doing a new chain as an example, right? Again, like, you know, we're also talking to them, but we'd love to work with them as well across a bunch of things. And so it's not that's it, but you could ostensibly see how, you know, maybe Robinhood or Arc, Circle's new chain, or Tempo, Stripe's new chain, right, as being a point where, you know, they're also trying to do something similar and people go there instead. And so it becomes a point of contention. The truth is, again, like I think for us, it's not really a thing for us because we're open to work with anybody. And I think truthfully, every one of those people brings in their own style, their own flavor to this thing. And we're so early in the game that I just don't think about competition at all in that respect. You know, I think a classic industry where it's fairly established and it's really about taking from others, you know, and growing things that way, then you do have a lot of competition. But for us, we're just we're in a growing market, you know. And I think when you zoom out for 2 seconds, which is hard to do in crypto when everyone's focused on the 1 second chart every day, and I'm guilty of this. But when everyone's so focused on the day to day, you can forget to look out for 1 second and realize that, like, you know, not only is crypto still super early, right? Crypto's a $4 trillion asset class, give or take. Maybe after yesterday's dump, 3.5 or whatever. But like, you know, let's call it, you know, crypto's like, you know, a three to $4 trillion asset class, right? And the real world is thousands of trillions. Each subcategory of RWAs is hundreds of trillions. Mortgage-backed securities are one, asset-backed securities, you know, equities, you know, bonds, all these things are these huge categories, you know. And so the idea that like there's anyone to compete, the only thing we're competing with that, you know, with competing with just sort of like people not doing anything and competing with ourselves. If we screw ourselves over and over, right, by launching nonsense products, by things blowing up and going sideways and scaring people from doing this stuff, we're just getting more life and more juice to people to do nothing, you know, versus, you know, coming in. And so that's really the point of competition is like, and to be fair, like, look, we compete with ourselves all the time in crypto, you know, like we've been our primary competitors, you know, like we start to get some momentum and use it and we blow it all up. And then we have to, you know, spend 2 years kind of getting it back. So I think that is the real point of contention for us is how do we keep the freight train rolling? You know, like it's definitely moving right now and things are coming down in such a ridiculous way. You know, I mean, you guys are in crypto. I would have, as bullish as I've been, I would have never thought we're here today. Like, just like the amount of positive attention and the sort of macro situation around all things we're doing is out of this world. And so I look at all this and say, you know, as long as we can keep our eyes on the prize and just keep, you know, building and growing crypto in totality, everyone here is going to massively win and be like very, very happy with what's going on. And that's why we're always like, that's why we're really happy to work with you guys as well at Wisdom Tree, right? Is, because I think one, it just brings a lot of credibility into it, right? And number two, we need this bridge to bring more people and bring more things. And also, again, going back to the point of screwing ourselves less, we need like, great folks that you guys to bring new products in, to bring a sense of like, sense of reality as well, and a sense of reasoning, and to bring this bridge in so we can consistently grow this market without having to rely on a bunch of pomponomics to make it work, and to me, that's like the most important thing. We have a bunch of local competitors here and there. Sometimes on a deal, I got to worry about this person, but we're all friends at the end of the day. I literally hop on the phone with the CEO of a big project that is like, look, dude, like, we can go against it, or we can just like, let's come together, do this one together, like, and I'll give up some economics and do something, but like, it's going to be great for everybody, and that's more what we want, right? So anyway, I don't know. Sorry to a little bit more, but that's my view at least of competition and where things are. I think, we are our own worst enemy here, and time and time again, we shot ourselves in the foot, but hopefully this time, it just blanks in the gun and we can just keep rolling,
A great point about us being the biggest competitors for ourselves. Yes, very, very taken.
Yeah.
Yes.
Well, we couldn't agree more, right? Like, to your point, it's not about taking a part of the pie, but growing it all together. So collaboration is definitely key. So when we're talking about growth, right, for you guys, 2026 obviously coming up, what are your major milestones?
For sure. Actually, Luke, I mean, if you love to hear what you think, because Luke's, I was just talking with Luke yesterday, so it's fresh in his mind too.
Yeah, we have a ton of goals here. I think we're always across all the like BD for sure. We're trying to work with more institutions. We have a number of I think just really promising. Not only finding institutions just to put a money market on us. I think we're beyond that, right? At this point, we're looking to do exciting things by you guys, with you guys, working through all the assets you have offered on Connect is really interesting, right? And trying to bring that to reality to the crypto audience. That's what we're trying to do. So for us, we're trying to replicate that. We want to go deeper with you guys as a primary focus point. We also want to do this with the new issuances that we're seeing across the space. So we're trying to link that together. And then on the flip side is we don't want it to just be oh no, it's just a money market. We want it to be an exciting asset that people are going to find natural usage for. And that means it's it gets past your hurdle rate in terms of oh, an investor is looking to meet this expectation. If you're going to just buy money markets, you just put it in bank account, right? They want to kind of get to 10+%. 15% maybe. That's what we're trying to aim for. And we have a number of really good, I think, RWA products and many cheeses today, but we're always on the hunt for more. So expanding that side, and I'd say maybe I'll let Chris tee this off, but a number of exciting plans from me for the next year is thinking about how we can integrate with new chains, right? There's so much we realize, to Chris's point, we're not in competition with everyone. We're trying to be a source of RWAs. Well, we proved that this year that can be done with permissionless RWAs, tapping into DeFi. This so-called DeFi narrative has been tremendous, right? And there's so much white space to work on this with different chains. And I don't think it ends, with Plume, and we're not competitive in this sense because we're only, trying to bring this idea to reality. And there's huge chains with tons of TBL, and I think we could use this. But maybe Chris, I'll let you talk about that among other things.
Totally. I think, look, the big picture for us, this first year of taking the chain out, was just about sort of getting established, right? Bringing on a bunch of great products, bringing on a bunch of great protocols and builders, right? And sort of going from 0 to 1 of this ecosystem, right? And then now that it's here, we've begun to see some life and see some activity here. It's two things. One is taking our ecosystem, what's happening here, and bring it to the next level, right? And expanding from, use case 1 to use case 2, which is now today, RW looping. We are the only ecosystem that does any of it today, right? And so we've begun to have a little bit of that going. And so how will we continue to scale and expand that? New asset classes, new usage, right? New types of collateral, right? All of that, right? And new uses, right? Number 2 then is taking what we've already done here and then bring it to other places, right? And other places within crypto, whether it's exchanges or wallets or chains or whatever it is, right? So that's my view on how how we grow next year, how we continue to make this thing happen, right? Plume has always been, built out of necessity, which is it's a starting ground, right? For a lot of this stuff, and then as it begins to work, we bring it elsewhere and we make it a thing. So we continue down that route, and I think next year, you also marry in a lot of the regulatory changes across the world, and begin to usher in a new phase of growth there. So, we've spent a bunch of time in DC and in Hong Kong and, recent Abu Dhabi as well, trying to bridge a lot of these things together. And I think that is the second point for us, which is we got our transfer agent license recently, right? We have a few others coming as well. And so, being able to lean into that, and build more products that focus on that audience and bringing these things together. And I think, crypto is very global, right? And so we really want this to be an avenue where you're combining the East and the West and the Middle East and whatever it might be and bring everything into one, right? Versus, today it can be very regional, especially when we talk about regulation. This needs to be the whole world interacting. And so I think that's like the third thing that we're really going to focus on in next year to keep growing.
Got it. Yeah, I think that makes sense. And I guess to double click on that, right? Like you mentioned this and you've alluded to this throughout the entire podcast now. I'd say 5 years from now, 10 years from now, obviously we're early. What will the average user be able to do? Let's say you have a paintbrush, you could say whatever you want, paint a perfect picture of what crypto, what RWA can do. What's that perfect picture moment that, really provides that killer use case for anyone?
Totally. I think there's so many. I think it goes back to maybe put it this way. I think in 10 years, the ideal situation is something going on that we have no idea what it is today. Sort of like back in, back when the internet was there, where, people were sort of just like, sending, people were just like accessing sort of academic papers over like a private internet, right? The idea that today, we'd be doing our entire lives on the internet, right? And, doing everything in the world possible through a machine. And you have people, disrupting, big media companies, right? With TikTok and just like a single account. It was just like not a thing, right? And so I think it's hard to say is the real answer. I think we'll know what this is worth when things are happening that we couldn't have even imagined, right? Because that means enough people building and innovating and just building stuff here that in new ways that we couldn't have articulated. But if we look at it in a more practical way, like I think the things that would be happening is, there is no on-chain versus off-chain, right? Everyone is on-chain doing their thing, right? And, that everything in the world is an asset, meaning you're getting paid in whatever you want to get paid in, for whatever you want to work, right? That is being used in there's no idle assets, and basically you think this way, as something becomes a market, right? It not only creates liquidity for that market, but it creates utility for those assets, right? Because people want to constantly use those things, which means fees are being generated and making money. So if you believe in something, you should be able to hold it, right? But also constantly let the machines, let that asset work for you, And so that's the way I think about it. It's like, if everyone's on chain, again, there's being about going to your point, being like programmable money, that there should just be a million hooks where you could take this thing, put it into, and things just happen with it, and you can dial up your exposure to whatever you want to be, right? And so you're constantly, again, letting the machines work for you, right? If someone wants to borrow against your Lulu, like you're more, there's a way to go put that on there and do your thing, right? If somebody wants to, and take out a loan against their on their durian farm or whatever it is. There's like very, very simple ways to do this, and it just means much more efficient like way to live for everybody and for businesses to access capital and do different things today. So that's kind of how I think about it. Which is, again, you can begin to see this activity now. People holding their whole net worth in Pokemon cards. And people, or people trading watches or people trading sneakers or whatever it is. And like that is money to them. And that's like how they hold the whole value, how they deal with things. And if we can make that world easy to do for everything and basically take every subreddit, in so many words, right, and make that both a liquid market, but also make all the assets in there like a thing, then that to me is like where we want to go and build this like global marketplace for everything.
Yeah, no, I love that. I think obviously we're players in the RWA space. We're both participants, you and I, and we have a lot of tailwinds, frankly, going in our favor. And, my takeaways from this conversation is, one, you're tokenizing everything. We're bringing all assets, whether it's Digimon or Pokemon cards or financial products, we're bringing that on chain. And then what we're really doing is adding use case to it, right? So that everyday users, whether it's institutional or retail, we could take these assets and do things with it. Getting a loan, making collateral, really utility. And I think that's what makes this exciting. So yeah, this was a great conversation. Just wanted to say thank you again to both of you, Chris and Luke, for joining us from Plume. Yeah, until next time.
Thank you.
Thanks so
Awesome.
much, guys.
Thanks so much. Appreciate it.
You have been listening to Crypto Clarified. Follow us on your favorite platform for more insights into digital assets, innovation, and the future of money. To clarify, the views and opinions expressed on this podcast are those of WisdomTree and Plume and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.